Hey, I'm Marco Lima with the Lima Market Report. Let's dive into how markets fared for the week of October 20th and what to keep an eye on as we look ahead into the week of October 27th. For last week, the U.S. equity markets delivered positive returns. The S&P 500 gained about 1.7%, while the NASDAQ composite went up about 2.1%. Strength was broad-based across major sectors, with materials up 1.1%, utilities gained about 1.6%, technology rising about 2.3%, and communication services leading with a 3.7% gain. The rally reflected improving investing sentiment and confidence in earnings resilience. In the bond market, yields declined modestly, really, as investors waited softer inflation data readings and potential policy pivot from the Federal Reserve. Investment-grade credit saw renewed demand, and the Treasury curve flattened slightly as the 10-year yield slipped below 4.3%. The move reflected growing expectations that interest rates may remain stable for the foreseeable future, but at least until early 2026. Several factors influenced last week's performance. On the economic front, strong third quarter corporate earnings was positive, especially from major banks and tech firms, which really lifted the overall sentiment. Inflation indicators show further moderation, supporting the view that the Fed could hold rates steady. In the meantime, geopolitical tensions eased slightly as the U.S. and China trade talks showed constructive progress, and the European political risks remained contained. Looking ahead into this week, investors will be watching key data releases on GDP growth, consumer confidence, PCE inflation. The main opportunities continue to be quality growth sectors, as we've been talking about for a couple of weeks now, and high-grade fixed income, where yields remain attractive. However, we're still concerned about slowing global demand, the strength of the U.S. dollar, and the potential for market volatility to continue heading into the year end. That's your Lehman report for the week. For additional insights and weekly updates, visit our website, MRAadvisory.com, and have a great week. Thank you.